The whole time I was muted. That is just great. That is fantastic. Thank you, Mikhail, for for bringing that up. So yeah, I was muted this whole time. So I'll just repeat some things. So it's great to be back after about a month and a half of not doing these live streams, and I'm excited to break down some DeFi strategies with you guys and explore different applications together. So if you have any apps that you want to learn more about or that you want to use but you don't know how, send me a DM and we'll do some research together. And then in a later stream, we can explore it together, like in a sharing the screen and everything. So of course, there's always going to be a part of this stream that's about Neutron updates and things that are going on in the ecosystem, including the Bitcoin finance campaign. But we can also talk about anything from other ecosystems. So if you have any questions, just ask in the chat, either on YouTube or on Twitter, and we can try and explore it. So something I know people have been waiting on is this Drop announcement. So Drop is a liquid staking protocol on Neutron. They had tokens, liquid stake tokens for Atom, Tia, Inisha, and Neutron. And so they are winding down and they're distributing some of the revenue that they've collected. And you can see how much it is in the DAO. It's there's about $100,000 worth left in the DAO, which represents about 42,000 Atom. So if you were farming droplets, which were their points for the past year, then you are probably eligible to make a claim starting on January 23rd, which is in 2 days. So definitely stay tuned on their Twitter or in their Telegram, and I'm sure they'll be releasing like where to go to claim your tokens, to claim your Atom. I'm super curious like what everyone's gonna get. I farmed it pretty hard, so I'm curious just as much as you are. And I'm also curious what you guys are gonna do with your airdrop. Are you gonna keep it in Atom? Are you going to maybe move to another liquid staking token? Or maybe sell to USDC, stack up on stables, or put some Bitcoin in the BTCFi campaign. Let me know what you're gonna do. So that's Drop, and kind of along that same line of thinking. So along that same line of thinking, people are wondering what is going to happen to the dNTRN and dATOM. So those were like the two biggest tokens that Drop had TVL for, maybe 20 million each. I kind of just made that number up, but it's around there. And these assets are already integrated into different protocols. The dNTRN is highly integrated into the BTCFi campaign on Neutron, so you can increase the rewards that you get by locking and staking Neutron. And so what happens in the background is that Neutron is then staked for dNTRN and is put into a lock contract for however long you decide to lock it for, up to 4 years and as little as 1 month. And so yeah, so the answer is that dNTRN will continue to be supported, and more details on that will come later, but we're actually going to also work on refreshing the UI for staking so that you don't need to go to the Drop website to use dNTRN anymore. And so I'll just show you guys briefly where this is going to be. So here on the balance page, if you go to here we go, earn and then stake, this is your connect your wallet. This is the portal, and so you can have your regular native stake, you can liquid stake, or you can stake and boost for your BTCFi. So when you hit stake, that's what comes up. Liquid staking through Drop, liquid staking and locking to increase your rewards on the BTCFi campaign, or just native staking if you want to select the validator that you want to support. And so that's exactly what you're going to see here. You can already stake. You can claim your rewards from the native staking. You don't need to claim rewards from dNTRN because it's auto-compounded into the token at about 3% APY. You can redelegate your native staking. You can unstake, but what you can't do right now is unbond your dNTRN. And so for that, you would have to go to the Drop website and unbond there. And so what we're going to do is we're going to add a function to unstake your dNTRN, so you no longer need to use the Drop website and you can do everything you want here. If you have a lock for the BTCFi campaign, it'll show up down here. And so all of your staked Neutron will be in one place. So that's a pretty nice update that will happen, that will help people's user experience for dealing with the Neutron token. dATOM, so the other liquid stake token from Drop. I know they posted online for looking for people who might be interested in like acquiring or continuing maintenance. I'm not exactly sure what they were looking for, but that's the last update we've gotten with dATOM. And yeah, you can see that there's a lot of dATOM on various liquidity pools and lending on Mars, and so it'll be interesting to see like who picks that up and where it goes. So people still have an opportunity to do some DeFi with Atom. Okay, so any other questions on the drop situation? I'll check the Twitter and I'll check for some questions because I know people were curious about this. Okay, great question. So Master Parka on YouTube is asking why the dNTRN ARB has not been eaten yet. And so I will explain what that means for people that don't know what the ARB means. And so when you have a liquid state token, it doesn't always trade at exactly what the token trades for. So if what the unstaking rate would be. So if you have a dNTRN and you can unstake it for, let's say, 1.5 NTRN, it doesn't always mean that it's going to trade for exactly the price of 1.5 NTRN. And that's because it's a receipt that represents some risk, because in order to go from your liquid stake token to your native token, you need to unbond that token. And so that takes about 21 to 24 days to unstake. And so there's some like time associated risk with buying a liquid stake token and using it, because if you want to exit really quickly within like less than 21 days, then you are subject to whatever the market rate is. And so with that like increased flexibility that you get from being liquid, you are then subject to the market. And so what the commenter Master Parka said is that dNTRN is currently trading, I think, about 3% less than if you were to buy it and then redeem it for native Neutron. And so that's called an arbitrage. And so that means there's a discount that you can take advantage of. If you want to hold Neutron, then you can just take your native Neutron, your regular Neutron, buy dNTRN, and then unstake it to native Neutron. And within 22 days, you profit the amount of the discount, speaking strictly in terms of Neutron, not in USDC terms. And so we have an app or a Telegram bot called Newt the Sniper. And so that's if you go to Telegram and you DM at NEWT, so Newt _the_sniper_ bot, then you can get started on this great tool. I forgot how to bring this bot up on the live stream because it's in Telegram, not in the web. But if you DM this bot, you can look at what are the price discounts on all the different LSTs. You can set up a vault where you deposit Neutron or Atom, and it automatically uses that deposit to then buy the discounted liquid state tokens, unbond them, and then when they're ready, reclaimed automatically and deposited back into the strategy to keep arbing. And so these strategies are really good for people that are like bullish the underlying token, and what you want to measure your success in is how much of the underlying token do you have. So oftentimes the alternative to this would just be like staking, regular staking. That's kind of the risk-free hurdle rate if you're trying to compound on the native token. And so you can usually get a better than staking APR by doing this arbitrage strategy. And so let's look at the rate right now. And I have a video that I figured out how to bring this Telegram bot up onto the live stream, so I can link that in the comments to this video if anyone wants to go back and watch it. So yeah, it looks like the discount is about 4%, and so that equates to about 60% APR. So you can get almost 60% APR on Neutron right now by buying dNTRN and then unbonding it for more Neutron. And yeah, like in the past, we've gotten really deep into this. So that's like level 1 strategy for arbitrage. Level 2, a bit more complex. If you're comfortable holding leverage, you can put the token that you want. So let's say you don't want to hold Neutron. you can put like USDC or Bitcoin on Mars or on any credit protocol, and then borrow Neutron, and then do the ARB with that borrowed Neutron. So that when you finally complete the ARB in 21 days, it doesn't matter what the price of Neutron or Atom does, because you're just repaying your loan, and what you earn is the difference between what you earned in the 21 days and then what you're repaying from your borrowed position. And so that's like a powerful tool, especially in Bitcoin finance. A lot of people are doing this with Bitcoin, because traditionally you don't really have natural sources of yield for Bitcoin. And so one way to make yield on your Bitcoin, because it is such a powerful collateral asset, is you deposit a whole bunch of Bitcoin, and then you can borrow these other tokens that maybe you don't want to hold, but there are yield opportunities with. And that then when you complete the loop or the ARB, you bring that yield back into Bitcoin or whatever your deposit asset was, and that's how you can like make non-productive assets into productive assets, or add more yield onto tokens that don't traditionally have yield. Yeah, so there's a few ways to capture this ARB. If you DM Newt the Sniper Bot, you can DM it /ARB, and that will bring up the current annualized APRs if you were to do this loop over and over, given the current market rates. And then you can also show a chart. So I think the past 2 weeks of the liquid state token peg. And so maybe it's been fluctuating a lot, and this is like a high point, a high anomaly. So maybe that signals that it's more interesting to capture this ARB right now, or maybe this is like the standard and there's no rush, or you can make different assumptions when you look at that chart. All right, great question, Master Parka. Let's check on X to see if anyone's there. Yeah, so Galuxe mentions that it's cheap to borrow Neutron on Mars right now. So that's another thing you need to consider if you're doing that second strategy where you're borrowing Neutron. That is now a cost that you're incurring from doing this strategy. And so that you have to remove that rate from your projected yield if you do the ARB. Also, of course, you're taking on risk by opening a leverage position. Okay, great. 418. What's next? That was Drop and dNTRN, dATOM, the maintenance, the new UI that is going to be updated on the Neutron app, so people can do all their dNTRN right from that page. If there's any use cases of dNTRN that you're interested in seeing directly on that page, I'm curious to hear from you, because I was thinking it might be interesting to put some kind of an arbitrage something there, so that when there is an arbitrage present on dNTRN, maybe it helps people see it or execute it. I'm not sure. I haven't finalized the idea in my head, but if you have any thoughts there, I'm curious. Okay, so let's transition into the Bitcoin finance campaign on Neutron. So we just switched into season 3, and that started. Let's go to the app. So if you go to this tab, Bitcoin finance, you can see that, I haven't even claimed my rewards on this wallet. So we're going to do a full run through of how to claim rewards, what to choose from, what it means. And for people that are recurring, I apologize for the repeated information, and I'll try and go through fast so we can have a nice full summary really quickly. So what is the Bitcoin finance campaign on Neutron? It is a campaign to bootstrap real yield on Bitcoin via kind of 3 core apps, which are Super Vaults, which is providing liquidity, and they utilize native integrations on Neutron, like a high-speed Oracle, and also cron module, so for automation. And so they're special kinds of LPs that give you good pricing and also move the liquidity. So it's kind of automated concentrated liquidity. They're called automated integrated market makers. You can explore them. There's lots of information on the docs there, and they're pretty interesting in how they work, and definitely rather new. And so if you have questions, I'm happy to answer more questions. And then Amber. So Amber is a leverage looping protocol that allows you to get up to 12x leverage on your loops. But this is not, you're not leveraging against USDC. You're leveraging a yield-bearing Bitcoin token with a non-yield-bearing Bitcoin token. So you're not increasing your exposure to Bitcoin, you're increasing the yield that you can earn on your Bitcoin. And so that is only made possible through Max BTC, which is a auto-compounding, yield-bearing Bitcoin token by Structured. And so it's targeting between 5 and 10% APY. I think it's right around 5% now. You can go to their Twitter page. It's in the comments, and you can see their performance over time. They're working on releasing a dashboard, so that will be super interesting for us all to track, like TVL, liquidity, and also their the performance over time. Whenever I say like earning 5% APY on a Bitcoin token, people are just in disbelief. And so how they say, like, how do you get that yield? Well, it comes from a tokenized strategy called the JLP token. And so you have a delta neutral position in which there are they deposit into the JLP, which is a liquidity token on Solana, which takes the counterparty from perp trading on Solana, and then they also short different tokens on Binance. And so you have positive in the JLP, you have positive exposure to tokens like Bitcoin, Stables, Ethereum, and Solana. And so if you go short on those tokens on Binance, what you end up with is just like 1x exposure to Bitcoin plus yield that is generated from the short positions, that is generated from liquidations on the Solana perp traders. And so, yeah, that's how it gets its yield, and then it's funneled back into an auto-compounding token, kind of like a liquid state token, but it's not being staked. And with this token, you can use it in DeFi. And so that's why there's liquidity pools and Amber for leverage looping this yield-bearing token. And so the campaign is, we need to make all these different pieces fit together, and they need to work. And so they all need liquidity and for this engine to drive. And so you need people that are interested in more risk on opportunities and also more risk off opportunities. And so in this campaign, there are incentives across the board for all the different positions to make the the flow for this economy work. And so you can read about the campaign if you go here. There's a little tooltip here, and it explains how it works. There's a few rules for how do you collect your rewards, when do you collect your rewards, and where is the yield coming from. And so here you can hover over the APYs and see where is the yield coming from, whether it's from DeFi, whether it's from the campaign, or whether it's in points. And so that's like a rapid fire debrief of the campaign, and we just went into phase 3. So each phase is 2 months long. And phase 3 now came with a few different changes, some of which were multipliers were adjusted. And so how the APYs work is they all come from one bucket, and they incentivize different positions at different rates. And so something like some of these partner Bitcoin tokens went down in multiplier a little bit. And so if you just want to lend UniBTC on Amber, you're earning almost 4% APY on your Bitcoin just by lending. And so that's a majority coming from the campaign tokens, but also some is coming from the what you're earning from lending. And so the idea is that eventually, even without these the incentives, it will still be attractive to lend because there's natural demand for borrowing these non-yield bearing Bitcoin tokens. And so that's the campaign. We updated some of the multipliers, so now it's a bit more attractive to loop. So now you get 2 times multiplier for looping, in addition to the yield that you earn from Max BTC being compounded and looped. And so yeah, for example here, like almost 40% APY for looping Max BTC with UniBTC. And so this is something people are asking about. There are some fees to open these positions because they incur a bunch of swaps. If you can get up to 10x collateral, you're swapping a lot of volume compared to your initial deposit. And so the fees that you're going to incur can be larger compared to your initial deposit. And so we're going to talk about that, how to accurately understand what those fees mean and strategies to reduce the fees that you take. But yeah, these are more long-term strategies because you're getting 30% APY, but you might be paying some fees to start it up. And so in order to make up for that, it needs to stay in the strategy. Other changes to the campaign, these filters were added, so this is really cool. You can go, okay, I only want to see positions that have wrapped BTC, and it'll show you the different protocols on this side. Or maybe you want to select, okay, I only want to see the super vaults with wrapped BTC. And so again, additional filters for you to think about your risk profile. and then position. Maybe you only want to lend, so it's like single target, single asset lending. These are the options for you. If you're comfortable LPing, then you can select LPing, or that's looping. Cool. And then this is also a new, this sidebar here, and so it shows you your total TVL. So that's great if like maybe Bitcoin pumps and your total TVL goes way up, which is awesome. And you can kind of just see, coming back to this page every day, you can kind of get an idea for what the price action of Bitcoin is doing, which is nice, especially for someone like me who's always coming back and like looking at things on this app. And then also your rewards. And so we have this orange banner showing that we can claim our rewards right now for phase 2. And let's walk through what it means to claim our rewards. It also shows what we've accrued from phase 3. So let's claim our rewards. When you claim your rewards, you have 3 options. Or let me look at the chat in case anyone has any questions about what I've already talked about. Okay. Fricklin is in the wrap BTC, even though it's not the most attractive APY. Yeah, I think a lot of people feel that way. Maybe they just want to hold wrap BTC, and that's great. And you can deposit single asset lent wrap BTC on Amber and still get like a really nice APY for Bitcoin. And the wrap BTC that is being used in this campaign is wrap BTC on Ethereum bridged via IBC Eureka. So it costs like way less than $1 and about 15 minutes to send it from Ethereum here, and you can already start earning. So it's super easy to get that asset. The liquidity, there's tons of liquidity on Ethereum for wrap BTC. All you need to do is bridge it back. And again, it's cheap to go in the reverse direction as well. Okay. Okay, so here are claim options. So at the end of the phase, so you need to keep your assets in here, in the campaign for the entire duration of the phase, so the 2 months. If you remove your liquidity positions or even change them, then you're subject to forfeit the rewards that you have accrued on that position pro rata. So like it makes, especially for Bitcoin, you don't always have to move your Bitcoin around that much. In fact, most people just leave it on a cold storage. And so in a campaign like this, I actually haven't found it that difficult to just pick a position at the beginning of the phase and then leave it there for 2 months. And then if you go and you claim your rewards, if you're not happy at that point, you can just take your assets and leave. So, and you still get the rewards coming. Okay, so yeah, and so if you want to like learn more about the reward structures, there's tooltips here, and there's also this how it works, and here for the when to claim and how to boost your rewards. These go to Medium articles, and they're good and have lots of information. And so okay, so yeah, you leave your rewards in there for 2 months, and then you claim, and then you have 3 options. The standard vest, so this means that when you claim, you will get 100% of your rewards vested linearly over the next 2 months. And then you'll go to a vesting page and you can claim every day, 5 times a day, whatever you want, over the next 2 months. An instant claim is you get 50% of the rewards and you forfeit the other 50%, but you get it like right now, as soon as you make your claim. And then the third option is for locking and boosting. So if you want to increase the multiplier that you earn on Bitcoin Summer on the rewards, then you can stake and lock your Neutron. And so again, if you're interested in that, read the Medium article. There's a lot of information there about like how much you have to lock and what multipliers you'll get. Okay, so yeah, okay, so let's claim our rewards. So we're going to do the standard vest. Neutron is vesting over 2 months. And now, so the phase has now started for like about 7 days. This was one change that we made for this phase. My vesting actually starts from when the phase ended, not from right now. So maybe you're away on a camping trip and you come back and you're like, oh crap, I forgot to start vesting my rewards. Now you don't have to worry about that because it's already vesting. So we can go here to earn and vesting, and we can see, our vesting rewards from phase 2 is here, and it's less than 2 months. It's rounding to 2 months right now, but you can see that there's already some amount that is claimable, even though I literally just started vesting. So that's great. You can go claim your positions and earn your hard-earned Neutron incentives. Another quick update from phase 3 is this featured bar here, and so these are some of the highest yielding or highly incentivized positions, and also tried to pick something that is attractive for more risk off people and then also attractive for more risk on people. So usually the higher the risk, the higher the APY, and so that this is for anyone to like kind of, a lot of people can be satisfied with these 4 different options. This is earning a lot of APY, and it's also just LPing a Bitcoin token with another Bitcoin token. So very little impermanent loss risk. This is a very high yielding LP if you're interested in LPing with USDC. So not everyone wants to do that. If you are willing, you get a higher reward. This is like probably the most risk off option in the campaign, just lending wrapped Bitcoin on Amber, and it's still earning 50% APR. Then for the more risk on, this is looping max BTC, and that's almost like 40% APR. So those are the updates to the campaign. We just talked about how to, the new UI, how to see your TVL, the rewards that you've accumulated, the featured positions, the filters that you can go through, and the multipliers and positions that have changed. And we just went through the process for how to claim your rewards. And so one thing I also like, a little tease here, I saw some people talking in the community Telegram that, oh, I got like 17% APR last phase on my Bitcoin. Let me do mine, or like, how do you calculate it? Or maybe some people didn't know how. And so I think that's a really interesting statistic, because usually people are like, I think I made a tweet, like, people are turning over stones to find 2% APR on their Bitcoin. And it's true, like, if you can see 2, 3, 4%, like, you're pretty excited, and usually that yield opportunity gets condensed pretty quickly. And so we're going to display somewhere here what yield are you earning currently on your Bitcoin. And so I know there's like other positions too. It's not just Bitcoin, there's a few different Bitcoin denominations, some of them have USDC, but the idea is like, this is your TVL, and this is the APY that you're earning on average from DeFi positions, from the incentives. And that's a powerful tool, because like mine would be something like 17% APR, and that's great on Bitcoin. I can just do that forever. And so that'll be something people can look at and view. Maybe as they move their positions, that number will change up or down. Any questions on some of the phase 3 changes? I see El Blanco repeating viewer here, interested in participating in the ARB, maybe by borrowing Neutron. Yeah, could be interesting. Cool. Okay, let's move on. Okay, so one thing I wanted to talk about and also demo is looping on Amber. So we've now talked about this quite a bit now during the stream, is how do you leverage loop max BTC on Amber? What are kind of the fees? How does the UI look like? And so let's go through it. And there's also a little bit of a trick to reduce the fees that you might incur, and also to like see when this is a good time to start looping or not. So we're gonna go over some of those things right now. So let's go to the app. So if we go to the Bitcoin Finance tab, and then let's navigate using our filters to looping. Okay, and it doesn't really matter which one we click on, but let's open up the wrapped BTC. Loop max BTC with wrapped BTC. This will bring us to Amber. Let's connect our wallet. Okay, and we need to see how, okay, yeah, I already have some deposited here, and so I might need to withdraw before we do this, the full demo. But okay, some things to like initially start looking for is here, the borrow versus staking APY. And so the gray line here is the historical yield of max BTC, the 30-day average. And the orange line is how much you're paying to borrow wrap BTC. And so that spread, that difference is the important number to look for in determining, like, will this be profitable? Once I open up and I pay the fees, is this position going to be profitable? And that's part of the risk that you accept when you're leverage looping, because it could be that the yield of max BTC goes down. For example, here it would drop, or here it come down, or also how much you pay to borrow wrap BTC might go up. And so, here it's going down, so the spread is getting larger, but it could also go up, and it might even become negative. And so if that happens, then you need to consider, do I want to exit or not? So it's never been negative since the start of this strategy, but that's just like something that I think everyone should know and keep in the back of your head. And it's why some people choose to just lend even though the yield is less. And some people want to loop because they're accepting that risk. Okay, so this thing, and this difference between the gray and the orange line is shown here in this yield spread, so 2.4%. And that's why it says healthy positive spread, because you want that to be as high as possible, and that will determine how much APY that you can receive from the strategy. And yeah, like once you open a position, you get a lot more info over here. So this is talking about how much collateral we put down, how much we borrowed. I think I borrowed 1x. Oh no, I did 6x leverage on this demo trial. Okay, so let's close this, and then we can open another one. Okay, so withdrawing makes you actually, like, when you withdraw, you're actually increasing the leverage. You're removing your collateral, but you're not closing your position. And so that's what this is saying. If you want to close, then use the close position button to fully exit your position. So here, modify. We're currently at 6.3x. I know this is a little backwards, so let's just close this and start over. Okay, cool. So now we have no open position. Let's go back to max BTC, wrap BTC. That's the market we're interested in, and why it matters which market you pick. And this will kind of get into some of the strategies I was talking about, why picking a market matters, because they each have different amounts of borrow supply that you can borrow the underlying asset. So you can see each of them are earning different amounts, because if you deposit Uni BTC, you earn yield from the people that are borrowing Uni BTC. It doesn't matter if people are borrowing wrap BTC. If you are depositing Uni BTC, you only want people, you only earn yield when people are borrowing your asset. And so each of these have a different utilization rate, a different APR for lending. And so you can see, okay, it doesn't show here, I think in the statistics, you can see how much of the asset is being lent, and that shows the supply. So how much can you leverage loop against it, you and other people? And so you can see here, yeah, so here recently there's 30 million in Uni BTC deposits, whereas only 847,000 of wrap BTC deposits. So that means if you open up a 10x leverage position with like $80,000 of Bitcoin, you take 100% of this supply of wrap BTC. Whereas if you did that same strategy with Uni BTC, you would take much less of the total supply. And that affects how much you pay to borrow those assets, because there's a utilization curve just like on a traditional credit protocol. Okay, so let's open our position, and we can look at kind of some of the fees to open these positions. And I'm going to pick this example because there's a strategy that you can take called like manual leverage looping if you want to reduce some of the fees that you are going to incur. Okay, so let's use our total amount of max BTC. And so we have $10 of max BTC, And let's say if we wanted to leverage it 3x, this automatically updates. So this is now saying that your new APR will be 9% APR, and that's the underlying APR of max BTC plus the looped APR. And so that's why it's about 3x. So that's this yield spread times 3 plus max BTC, something like that. Okay, and then you can look down here and you can see the market rate. So this is the underlying staking APY of max BTC, the borrow rate, how much BTC is available. Okay, this looks great. And then, yeah, so here this is showing the swapping costs. So it costs 0.3% of my initial collateral to wind up this position. And so it will take 4 weeks for me to overcome the fees that I incurred to open this position. So some of these numbers are like slightly different because Amber prices max BTC at the redemption rate, whereas a lot of times max BTC actually trades for higher than the redemption rate because there's KYC, and so some people might not be willing to KYC, and so they're more willing to pay a premium to not KYC and buy those assets over the market. So this is what it would look like to leverage loop some through the app max BTC through wrap BTC. And so this swap will go through super vaults. And so you can see if you get a better or worse swap by going to that market on super vault. So this is kind of like where a little bit of the strategy starts. So let's go to super vaults, wrap BTC. Okay, this one, max BTC, wrap BTC. Let's click on it. You can look at the TVL. So the total TVL tells you also a lot about how much can you swap. It's not just the lending supply on Amber, but it's also how much liquidity is there in this pool if you want to swap to open your position. And so yeah, we can look at the statistics. You can see volume, you can adjust the time scale, but this is what I'm looking for, this pool balance. And so it has about 46% max BTC, 54% wrap BTC. So the closer the balance is to 50%, 50%, the least amount of fees that you will pay. In fact, if there was a ton of max BTC in this pool, you might even get paid a little bit to start looping, because when a pool is more balanced to one direction, it gets cheaper to remove that asset from the LP. And so when you open up a leverage yield position, what you're doing is you're making a lot of repeated swaps. You're putting in wrap BTC and you're removing max BTC. And so how that affects the balance will affect how much you have to pay in fees, and also how much supply there is for you to make this swap. So again, I know ideally you don't have to look at any of these things, and you can just go to the Amber website and hit open and not think about anything. But there are improvements to be made, and until those improvements are made, this way of thinking about it, I think, is very helpful. It's also important, I think, to just know what is happening in the background, so you can educate yourself and learn why things are happening and which applications your magic internet tokens are touching. And so if you want to think about the whole flow, then these are the steps that I take before opening a leverage position. Okay, so that is how you would do this, just leverage looping. Go to the Amber website and leverage loop wrap BTC, max BTC with the wrap BTC market. If you wanted to save some money on swapping, then what you can do, and this is especially important if you have a lot of size and your swap will directly impact the balance in the pool, and that will incur larger swap fees. And so what you can do is you can manually loop. And so go down to the bottom of the platform and you can click V1. And again, this requires KYC. So what I'm going to say, you save some money on winding up but you also need to KYC. So that is a blocker for some people. If it's not a blocker for you, then you need to think about if it's worth it for you to KYC in order to have this like cost savings. Before I get into it, I'm going to pause and look at the comments to see if anyone has questions on the automated opening of leverage positions. Yeah, so looking at the comments, Fricklin says that structured you need KYC. So yes, that's true. So if people want to hold max BTC, then you can either mint it by KYCing and going to the structured website and minting it with wrap BTC directly, or you can buy it from the open market, whatever price it has. Thank you. And then okay, and another question, let me just read it. Okay, Master Parker says, I assume I do max looping and my position comes to a liquidation point at some point during phase 3. And if you unloop your position, then yeah, you would forfeit the rewards that you have accrued in phase 3. That's true. That's a good point. And that's maybe something to, like, you know, to consider turning off the forfeit indication on loop positions. Yeah, I agree. There's some room for improvement there in terms of UX, and I'm going to give you a reason why I really don't think that will happen, because how you get liquidated on Amber is actually pretty difficult, and so I don't think people will be in that position. But you're right, it is possible, and maybe I'll take this moment to explain like how liquidations work on Amber. So if you pump up your leverage all the way up to 12x, then you're like very close to liquidation, and so that means that you've borrowed a lot of wrap BTC against your max BTC collateral, and so you get liquidated not if Bitcoin goes up or down. You get liquidated if your collateral is worth less than your borrow. So in this case, your collateral is max BTC. So max BTC needs to go down in value against wrap BTC. And so how does that work? That only happens in Amber if the yield that max BTC is generating is less yield than the cost for you to borrow wrap BTC. And so that's what I was saying with these two lines. That's like what you want to pay attention to. If they cross, so if the gray line goes down and the orange line goes up, and they cross and then stay crossed for a long time, then you become like that is where the liquidation danger happens. But just like when they cross doesn't cause a liquidation, because for how long you've been in the position, you start to the max BTC, earning yield, and so your collateral is getting bigger and bigger. And so just crossing doesn't immediately trigger liquidations. It just is showing you that if it stays like this for a long time, then like that is where the liquidation danger happens. And also, if you are only leveraging like 10x or something, so even if they cross and even if they go negative for a period of time, you have that buffer, because you can borrow up to 12x, and so that space between what you pick and the 12x is also a part of your liquidation buffer if those two lines begin to cross. And so yeah, like when you start with a 12x leverage position, you're not giving yourself a ton of room, because you open it at the maximum possible, and then if the next day the yield of max BTC drops, the cost of borrowing stays the same, you're forced to repay the borrow amount, but the yield, your collateral is not earning value. So your position hasn't had time to like accumulate collateral value. So yeah, that is like, I would say that is the most likely way of getting liquidated, is someone opens up a 12x position and then like immediately the cost of borrowing wrap BTC goes up. And it's pretty cool if you put in like, I think you can do this. Yeah, if you put in 1 Bitcoin, the UI is going crazy. Okay, so this is being live updated. So, and I think this is actually a really smart thing that was added to the Amber UI that maybe people don't know about. If you put in, like, simulate what your impact will be on the borrow rate on the borrow rate. So if you put in 1 Bitcoin and you want to leverage it 5x, you can see the borrow rate is going up and just about meeting the current 30-day average for max BTC. And so, yeah, if you do this, then everyone in the pool will be like not earning anything because they'll be paying the same amount that they're compounding. And so this could be, yeah, like what you said, if you leverage this all the way up to 10x and you put in a Bitcoin, then yeah, your borrow will be significantly, you'll be paying a lot more to borrow than max BTC is earning. Good question. But yeah, like at the end of the day, you're right in that could be a situation where you have to unloop it. Yeah, so you check the lines, and as long as the orange one is below the gray one, you're good. Yes, that's right. And I'm pretty sure there are ways to check your liquidation level, but I don't actually know that for sure. So maybe that's something that I can discover and then bring back next week, so you can see exactly like how close to liquidation are you. So say you started at a 5x multiplier, the lines cross, and it's been 2 weeks, and you're starting to get nervous. You should be able to see like how close you are to liquidation. And so that's a good thing for me to explore for next week. Thank you for the questions. Okay, so now what I was trying to say is, if you want to now reduce some of the swap fees that you incur by opening up a loop position, and you are comfortable KYCing, then you can go to the V1, which is like almost like an Aave style interface, where the only thing that has collateral power is max BTC. So you would come here, you would supply max BTC. You can see the APY about 4% right now. This is the 30-day average. And then you can borrow any of the assets. So if you can borrow wrap BTC, so this wallet is actually not KYC'd, so I won't be able to do this on the live stream. But I can show you the flow. So you deposit max BTC, supply, and then you can borrow. Here we can supply all of our max BTC. Okay, and now we can borrow our wrap BTC, and if you hit the max, if you borrow the max, that's like essentially one loop, like one full loop at the same liquidation threshold as max looping, but you're just doing one loop right now. So you can borrow this maximum amount of wrap BTC. So let's borrow it. We just borrowed 0.00111 wrap BTC against our 0.000119 max BTC. These are tiny numbers. And then you would go to the structured website. So this is the structured website. Then go to mint max BTC, and it brings up this minting modal. And so you can either mint it directly from Ethereum or minting it from Neutron. So our wrap BTC that we just borrowed is already on Neutron. Connect your wallet. You see here it says submit KYC. So if you are interested in doing this, this would be the first step for you. So go here to submit KYC, and then you like go through this little ZK.me module. I think it took me like about 20 minutes to do, most of which I was just waiting for them to approve me. You take a picture of your ID and answer some questions. Okay, so here, and you can simulate how much you will receive. Because again, remember, max BTC is auto compounding, so it's not just going to be a one-to-one. Max BTC is increasing in value over time, so you're not going to receive the same amount of wrap BTC in max BTC when you mint. And also there is a small fee, which is 0.002% fee. So this is this is what we would receive. So, okay, so if we had submitted KYC, I would just click this button, mint, I would receive 0.000113 max BTC, go back to Amber, supply more max BTC, and then go ahead and borrow more wrap BTC, and then you just do that. So I'm not swapping through super vaults, I'm not buying on the open market, all I'm doing is manually minting more and more wrapped max BTC and then supplying it as collateral. And so that's one strategy that you can do to still open up a position, but not have to go through the super vault. So if you have a lot of size and you want to, you can do this for uni BTC. So maybe you have a lot of size and you want to go open the uni BTC market, which has 30 million lent uni BTC. You would do this, drop your max BTC, go borrow uni BTC, and then find where the most amount of liquidity for uni BTC is, swap for more max BTC, and then, which is probably on Ethereum, like it doesn't have to be on Neutron, you can bridge it back, you do whatever you want with those assets once you borrow them, and then swap for more wrap BTC, come back and mint more. And so that's how you would manually loop and start like, and use the 30 million lent uni BTC. So I'll stop there. We did manual looping and regular looping. We talked about the pros and cons of each one with KYC, had a look at the super vaults and the balances and trying to break down some of the UI for kind of like thinking about how to and when to open leverage loop positions. Any questions here? So, yeah, right now, Galuxy, you're right. Right now, there's not much price difference because the super vault is very balanced. And so that's a good observation. If we go like what we were looking at previously, the super vault is very balanced. So at this point, you're probably going to be getting a pretty good price on max BTC. But if there was very little max BTC in the vault, it might be more expensive, and that might be when you choose to manually loop. And the other comment you made is that manually unlooping is a pain, and it's only a pain if you don't have any external capital. So yeah, right now we would need to withdraw max BTC, swap it back for wrap BTC, repay like one loop at a time. But if you have external capital, then you can just buy the asset that you borrowed. So in this case, wrap BTC, go buy a whole bunch of wrap BTC, repay your entire loop position at once, unlock your max BTC, and then you can unbond your max BTC or sell your max BTC to like bring you back to your initial position. So that's yeah, that is definitely an ease of life comfort for unwrapping your positions. And even if you have automatically wound up positions, I think they're still here in this UI, so you can still like choose that way of unbonding if it makes sense at the time. So yeah, like all these little things to pay attention to, definitely take time to understand like where they all are, and I'm happy to talk about them and if and when, or in the Neutron community Telegram. If you say, hey, like I want to unloop something, can you help me find what I need to be looking for, or is this a good time? I'm happy to talk to you about it. None of it is financial advice, just me exploring DeFi applications with you and talking about my personal strategies. Cool. Okay, so we are just about the hour. This is perfect timing. If anyone has any other questions about anything we went over today, or about anything else in Web3 that you want to talk about, now is your time to ask. And if not, I will see you next week. So I'll give you a couple minutes to think about it, digest a lot of what we talked about. I know looping is a more complicated strategy with all the different moving parts, and that's why I'm bootstrapping this DeFi ecosystem where leverage looping is enabled through those 3 apps we talked about at the beginning, like the Duality Super Vaults, the Structured Max BTC, and the Amber looping interface. It's yeah, like it can be difficult to make sure all the liquidity is in the right place, and as you're seeing, when one piece of that puzzle is not like fully in sync, then it causes some higher fees or maybe a bump in the user flow. And so that's why it's important to really like get all these pieces working oiled together and get liquidity in each of these to support people with all different sizes. And so that is the idea of the Bitcoin Finance Campaign, and I'm pretty excited to see it come together. Every phase, we get closer and closer. So if that is it, I will see you all. Let me check one more time the comments, and then that was it. Cool. So that's it. Thank you everyone for coming this week, and hopefully I'll see you next week, and we can make these a more regular occurrence once again, and start exploring and learning DeFi together. So thanks guys, and see you next week.